we're going to look right now at the stock market and look at SPX. I'm going to leave that gold chart right over there and go to SPX. Now, this is what's going on right now in SPX. For the week, we have about a 1 3/4% up week right now. It all came on Monday before the opening. So what we're looking at here, of course, is cycle analysis, and we're looking at this purple dash right over here, which is the NASDAQ. And what's key about this is that it's not really in rhythm. In other words, the phasing is different because the S&P 500 has got this minor cycle coming down right into this period, and the NASDAQ a little bit further out and is in a much weaker formation. While the S&P 500 made a new high along with the Russell, and the Dow didn't quite, it made it just by a little bit. The NASDAQ did not. And the NASDAQ, as I showed you, has all of these stocks and all of these tech stocks. If you go back and watch that candlestick segment that I did, that is a signal that the NASDAQ is much weaker. What we're looking for in here over the next 1 to 3 months is a decline for the market to begin, and it might have already topped on this panic buying right in here, but not any real huge decline. So it's comes down in here to end of November, beginning of December right over here, and then a stronger close for the year is the way this sets up. We're going to look for really only a move down into this this minor support area. That's 34.80 approximately. That's about 34.37 right in the middle there. That is 33.85. So well, just focusing in on about that 50% fib right over there, about 34.34 or so, is about where we expect a pullback to come. That would be about maybe 100 and we'll say 110 to 130 points in the S&P 500 over the next few weeks during this into late November to early December, and then a stronger close for the year that we're looking there. Techs right over here. During this time period where we think the market declines, the tech stocks we think are of the greatest risk, and you can see that projected right down over here. So this dashed line is the NASDAQ tech cycle. This dotted line is the S&P cycle, and it remains to be stronger. We have momentum right over here that has been waffling a little bit, kind of turned up by a little, down by a little, so it's been neutral in here and now turning up by a little. So it's not really giving us a really strong indication, but it is fairly likely that we're going to see some test down over here of this 34-week moving average that's coming up sometime out over here next year. So if we're looking out 1 to 3 months, well, for the next month down a little, for the next month or month and a half after that up a little bit, and then the risks really pick up. You see this yellow zone right over here? That's where you get your biggest declines, as you can see historically right there, as you get into the final stages of any of those cycles. But that doesn't come really until February, March of next year. So, we said in the beginning of the show we expect a range in the market, and the range really comes from the peak that we made right around that level and this low level right over here around 32.5 or something like that. And that's really the range that we're looking at, that we expect the market to stay in now over this time period. Yes, that would be a period of lower implied volatilities, maybe a lot less risk for strangle traders, for straddle traders, and for traders that really focus on option decay. We think you're probably going to have a little easier time of it for the near term, but then the risks are going to pick up again moving out, and that's just a little sneak peek of what I think is coming for the big picture. When I talk about that, when I do the big picture review coming up for our level 2, 3, and 4 members this coming Thursday. So a view of what we think is a choppy situation. Again, this is the range that we're expecting, and that range I could really narrow it for the near term right now, looking at about 34.30 or so up here to about 36.50. Maybe it's a 300-point range for the next couple of months, and that will be probably a little easier time for option traders during that time period. All right, that's it. That's our view for the next 1 to 3 months of the S&P 500 for the overall stock market, and the situation we believe that is going to bring a just modest decline over this next few weeks, and then another attempted rally, and a continued rotation as value does better and the tech stay-at-home, work-at-home stocks continue to be weaker. That's a look at the S&P 500, and I hope that was great information for you.